Okay, one common question that I get asked is, Shankar, which one is safer, either futures or options? Let's see in our mind map and identify for ourselves what is a better way of doing. Okay, so the both of them are derivatives. Okay, both of them are derivatives, futures or options. Okay, you would have seen F and O. F and O meaning derivatives. Here I am writing F or O. Okay, F meaning futures. The other one is options. Okay, so I will tell you what is the difference between this. Okay, first and foremost, they are derived from the stock. They are derived from the stock. For example, there will be an underlying instrument, and these are the derived instruments. Okay, let's say, for example, there is Infosys. Infosys futures is derived from the Infosys stock. Clear? Yeah, Infosys futures is derived from the Infosys stock. Infosys options is derived from the Infosys base stock. That's the first one. Second is both of them. Okay, both of them you have to buy in lots. There are specific lots. For example, Nifty has, you need to buy 50. Bank Nifty you need to buy when you are buying derivatives. When you are buying in stocks, let's say if I want to buy only a single stock that I showed you in other videos, you can buy that. But if I want to buy multiple in futures, in options, in derivatives, you have to buy in lots. Lot size, we call it as lot size. One of the homework for all of you is find out what each of the stocks and their lot size, and let me know in the comment box. Okay, stocks and their lot size. Nifty ka lot size, Infosys ka lot size, HDFC ka lot size, HDFC Bank ka lot size. Will you do that? Type yes in the comment box if you can take this homework and do this. Yeah, very important homework. Second, you need different margin money for futures and different margin money for options. So options is actually a slightly more complex product than futures. In options, there is something called as shorting or selling or writing options. In futures, it is plain simple, long and short. By the way, what is long? Long is you buy first, sell later. What is short? You sell first, you buy later. Okay. In options, you have shorting, you have buying also. Okay. So now, just to give you a quick idea of options. Okay. In futures, I'm not going in this thing. In options, how does the buying and selling look like? So if you have bought an insurance by paying the premium for your age criteria, how many of you know that for different age, there is a different premium? Likewise, in your stock market also, for different levels, there is a different premium that is attached to it. If you're understanding this, type yes. Okay. So for, let's say, for example, Bank Nifty is currently trading at 17,000. If you want to buy it at 17,500 option, that will have a different premium. Why? Because of the correlate that with your age and your smoking, not smoking, and your other criteria that you have given. Okay. So likewise, there will be a premium. Then the strike price is what I just told you. The age wise is the strike price. And then you buy the premium. Okay. This premium can be the one that you are paying. You will be paying 30,000 rupees. You will be paying 15,000 rupees. You are going to be paying that. That's the premium. And your age is the strike price. If you have got an aha moment in learning options today, type yes in the comment box. Type yes in the comment box. Okay. That's the. So then there is on the other side, which are your insurance companies. They are selling you insurance. Are they? Aren't they? Okay, they are selling insurance. Now they write insurance for you. They collect premium for you. Do you know about these LIC premium collection centers? Type me in the comment box if you know about the LIC premium collection centers. I don't know about your city. In my city where I stay, in Bangalore and whole of Karnataka, I can see LIC collection centers. Do you know what they collect? They collect premium. So you give premium and they collect premium. That is how the entire thesis of options buying and options selling. Just that there is a market for this. There is regulated market. Automatically you'll get the calculated prices. You will buy, you can exit early, you can without the before your expiry day. Like for example, in your contract, in your term insurance, there is a term 1 year. After that, you have to renew. Likewise, there will be an expiry date. Okay. For futures, there is only, for example, if you look at stock futures, all of them expiry date is when? Okay. When is the expiry date? Let me know in the comment box. Last Thursday of the month, sir. In options, there are two kinds of this thing for index trading and stock trading. For index options, they have both monthly and weekly. Okay. Then stock options, they only have monthly expiry. When is the weekly expiry day? When is the weekly expiry day? Again, last Thursday of the week. Okay, today was an expiry, the one I am shooting this video or explaining this. Okay, so now coming to the question, which one is good, which one is bad, or which one is better, or something. When you are buying options, the margin requirement will be lesser, but the probability of you making money is also lesser. And you don't need any complex, you don't need any advanced training to understand this. You just go back to my insurance example again. When you are paying insurance, the probability of something happening to you is less. That's why you are comfortably, you are paying that money. If the probability is higher premium is collected. So options buyer, mathematically the probability is lesser. There are ways to skillfully add strategies. There are definitely strategies. Okay, so we can learn them also. There are strategies you can actually use, but mathematically, probabilistically, the probability is less. Okay, but the person who's collecting, he has higher probability. If you agree, type yes. The person who's collecting your premium, he has a higher probability. But when he loses, when he has to pay the whatever that money, sum assured, that is when he will end up paying more. That's the nature of this business. Okay, so coming back to our trading, when you are trading in options buying, you need lesser money, again based on the strike price that you are selecting. But in futures, you need slightly higher money, 3 lakhs, 4 lakhs, 5 lakhs. That's how much you will need. Give me a stock name, I'll show you how much money you need. Give me the stock name, I'll show you how much money you need. Okay, give me a stock name and I'll show you how much money you need. SBI. Okay, let's go to there is one more video on brokerage calculator. There is also something called as margin calculator, which you can actually check out. But let me show you. Just a minute. Now let's say SBI futures. Now we are doing for futures. Okay, SBI and 22nd April. Okay, there will be monthly contracts. You will see the next month contract and other stuff also. So April contract I have added here. This is currently trading at whatever price. Now if I click on buy, okay, this is 1500. Can you see the margin requirement here? 2,75,000, and this lot size is 1500. So number of shares 1500 becomes one lot. One lot will become this thing. Let me show you other stocks. Let me show you Bank Nifty futures. Okay, if you click on buy, I'm not sure if these guys show. Yeah, so for normal it is 1,53,000. For MIS also it is 1,53,000. Okay, so this lot size is 25. Okay, then there is margin money and other stuff which you will be able to learn this. Okay, so that's the futures. You'll be a slightly bigger capital that you need. Options, On the contrary, for buying, you will need lesser money. The capital required for futures and also the option selling, it's almost be the same. Okay, the capital requirement for futures buying or selling and options shorting will almost be the same. So coming back to which one is better, definitely options has many options. If you can learn the art of trading in options, then it has very high chance of giving you consistent profits. But futures can be used for the higher profits. Instead of doing the cash trading, you can take leverage and trade in futures. But any day, options has many options because there is, you can hedge the positions, you can take far off and then take lesser margin. You can do many, the opportunities are many. There are different strategies in options, like pure naked options buying, naked options selling, then long buy, long call, long put. Okay, then there are straddles and strangles. If somebody was asking me, Shankar, what is the best place to start, you can start with option straddles. Then there is the again straddles with hedging. Then there are advanced strategies like calendar spread and other stuff. Then options with adjustments. There are so many other advanced strategies that you can do under options. Okay, so that's the difference between options and futures for you.